Lesson 4.1, we're going to look at the break of structure versus the change of character. Now, what is a break of structure and what is the change of character? Let's just go through that. You can read the content, obviously, but I'm just going to give an example or explain it on this chart. If you have a trend that is continuously going up, obviously it never goes straight up. There's always a little pullback or a deeper pullback. Now, this means of measuring a trend, we look at break of structure. So if we have this here, price comes up, pulls back, and then continues up, that is a break of structure. That level, the higher high is broken, and that's what refers to a break of structure. It continues on. So if this is our impulse, say this is a wave 1, wave 2, wave 3, wave 4, and wave 5. Obviously, within that wave, or motive wave, or the corrective wave, we have possible scenarios where we can have impulses to the downside, we can have complex patterns, all covered under the Elliott wave theory. What we want to do is understand what the trend is from the higher time frame versus a small time frame. Within this impulse, there could be many waves all the way up. And it's this method that we look for higher highs and higher lows until we get a point where we need to measure the key level and the reversal, and that way we can say, okay, that's likely a wave 1 and this is likely to be a wave 2, and how do we gauge that? So we're going to go through that exercise or presentation on how we do it. On the smaller time frame, if you look at these ones in the example, using this as a reference, we get a higher high. So this is our higher high, this is a higher low. The horizontal level is our key point. And once we break that point of reference, we get a new higher high. And we do a straight line across. Now that's broken based on this methodology or terminology. We have a break of structure. The break of structure is at that point. So our higher low is the reference after that break. And if you look at our other lesson, high highs and higher lows, we go through this in detail. The break of structure is here, and therefore we get a new higher high, and then we get a pullback. The moment it breaks that, our higher low goes there, and so we maintain this uptrend. There's a point where we might do that. We don't get so we get a higher high, but we don't get a higher low. So our higher low is there, and the moment it breaks that higher low within the trend, we are likely, even wave 3, it could be wave 3 or wave 5, we're likely to get a corrective wave or a reversal. So we look at this change of character. So here we have a consistent character where we break that the structure each time. But then there's a change of character. And we could say change of market, change of momentum, change of direction. So that's an uptrend. We're going to get a downtrend potentially. And so we look at these methods, this approach, and we're going to talk about the channel or the trend line as additional information. So let's go through that with this exercise. Hopefully that makes sense altogether. So we'll keep this chart here for reference, and we'll continue on with this exercise. So let's continue on with this. We have a flat level, no trend change at all. Let's just get the red one out. But we have, so basically we're flat on top, no change. However, we're getting a low, a higher low, and a higher low, and a higher low. Where is that chart? Let's look at this. Here we go. So basically what we're looking at is that higher low, higher low, high, 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 high. We're not getting a new higher high, but we're getting a higher low, which eventually leads to a breakout. Now, if you look at this chart, we have one touch. That's really a two touch, third touch, fourth touch. That's really dragged on. That's a strong resistance. Once you break that resistance, the trend goes up. Now, we're going to use this methodology to explain the trend. Let's just get in close. Keep this here always as a reference. What we have is a higher high, basically using that method. Then we've got a higher low, which is there. And the moment it breaks this level, in a small sense, right there, we get a new higher high. So that's our new higher high. But when we look at it from a chart perspective, we could say that, okay, that's there. We get a pullback. That's our reference point. So basically, we have a move impulse, pullback, and another impulse. Now we've broken this spot. It's a continuation. Now we've got a new higher high. We get a pullback, which doesn't go below here at all. So our trend is intact. So we've got this higher low. We've got this higher low. The moment it breaks this level, this becomes our new higher low. And the breaking of market structure, we get a new higher high. Again, similarly, that higher low stays there. We get a pullback. The moment it breaks that level, the horizontal, we get break another market structure. We get a higher high. This becomes our new higher low. So the trend is upwards, as you can see. Now let's move across, grab that, keep going. And we're going to see this method to look for the change of structure. Okay. We get a pullback. Again, another higher low. The moment it breaks that level, that becomes our higher low. This becomes our new higher high. Higher high. Now this, on the smaller time frame, we can do the same, like that, and like that. So this is a higher low, that part there. So on the smaller time, with this impulse, we actually get a break. Although the macro is still intact, the small time frame, we get a break in that trend, and therefore we get a deeper pullback. And this higher low, which was derived from this, gets compromised. So now we've got a lower low. We've got a higher high. We'll come down A, B, C. So we look at Elliott wave correction, right? So from a macro perspective, we've got a big impulse to the upside. We get a corrective phase. So this is a corrective phase. So let's just put this line across. However, the liquidity is taken, but we don't make a new low. And if anything, we get a new higher high. So this becomes a higher low. That's our new higher low. And that's our new higher high. We break that, we get a new higher high. This becomes a new higher low. So a market structure continues on. So where we have is this. Okay, we're still looking for this scenario. The break of the structure hasn't occurred. The change of character hasn't occurred. So change of character is here. So now we've got this high break up on a smaller time frame. That's a higher low because it's broken above these two. So this is a higher low, and this is a higher high. Our market structure is intact. Now you can put on your pattern hat, look for patterns. This looks like a triangle of some sort. We get a new high. So we range sideways. We don't get a lower high, a lower low. What we do is, it's a bit awkward, but at times you just got to look at a trend line rather than the high, and that's the breakout there. It's not, this is not the breakout. That is the breakout because of the touching and the pattern formation. Okay, you can say that's a triangle. It's broken out. Now we've got a new high. We've got a higher low over here. So let's just clean that up. We've got a new high. Moment it breaks above it, right there. We'll get a new high, and the higher low is there. And you can see, short-term wise, once we break that level, we get a lower low, and you can see the change of market. So what we have now is this. So change of character. What it means, price break structure against the current trend. That's what we have. What does it tell you? The trend is weakening and control may be shifting. So that's what it's telling us. And I'm not going to talk about how you find the entry. So what it's done, and it's nasty, you become bearish until you find a reason to enter along. But you should take your profit. So this is a conservative way of looking at a chart. So if you were to enter at the bottom or enter somewhere on the way up, this will be a cutoff point to take your stop loss. So you'll be raising your stop losses along these ways, the high lows, and the moment you break it, with some methodology, you can say, okay, yeah, it does break, but it could still range. However, you will need to look at indicators and a few other methods. We're not going to strategy, but this is a change of character. Looks like a topping off structure. It didn't, this triangle, if this triangle was to play out, it should have gone higher, and it hasn't. And we can use Fibonacci and along the other ways to say, okay, what is the likely chance that we didn't even hit the golden ratio, it's fallen below it. Then we can put our moving averages to confirm. And there you go. So the moving averages become bearish. Actually, what's this one on the daily? Yep. So if we clean that up, and what we'll need to also consider is many other things, but the change of market structure took place. So that's the neckline. We said that is a higher low. That is the previous high. So you can see that's not holding. We didn't make a new high. We can use the trend line as a means of measuring this. Again, perfectly there. So now we're going to see it drop. We have warning signs about the moving averages. We can put the 50 moving average on there as well. Let's see what that gives us on the daily. So the 50 is become compromised as well. And you can look at the trend. You can say that's relatively, the straight line is doing the trend. That's a rising wedge. If we had bearish divergence, so if we add in our indicator, we're going beyond the scope of this, but we should see a bearish divergence taking place. So we've got highs and RSI is a bit lower. and that pullback. Now, 50% is basically confirming we've changed the trend. We've broken the mean of the RSI. If we look on this on the daily, let's just have a look on the daily what it does for us. Now you can see the bearish divergence take place on the daily, much more significant. We've got RSI there and the RSI there. So that is pretty bearish. And it comes all the way to the bottom. And then we get a double bottom on the RSI, bullish divergence. And that's why we find a change. So that's coming down, but that is straight. So this bullish divergence taking place. So that change of market structure, there's a corrective wave, A, B, C, and then continue on to the upside. We don't want to get into more analysis. The whole goal was to talk about the change of market structure or character or the trend. And so we've broken the trend of this structure. We've changed our character from there to there. However, on the bigger time frame, we were to look this on the bigger time frame. Now let's just delete all this for a sec. There's our structure. And we said there's our structure, but the bigger structure, let's just get this. Even though these are higher lows, we could still say that is the latest, or that is the latest higher low. That market structure hasn't changed the second one. It's a hard one to explain, but ultimately, this is a corrective wave, and the previous higher low, yeah, it's broken that one. That's why we pulled back. But now we're going to use this as a reference to that, and it's still higher low. And the moment we break this level, we fit into that scenario, and we have the uptrend. This could be seen as a cup and handle, and up. So we've got an uptrend, perfectly cup and handle, and therefore up. And then we go into other strategies where we can say, okay, from there to there, we can have two figures. Perfect. Okay, so that makes sense. We go sideways. That's a bull flag, and we continue on. So this is a perfect cup and handle structure, and we expect more in terms of targeting. What we could do is from there, we make that the golden ratio, and still it passes our target. So, but you can see how that will be in the neckline. So it's overperformed, and yeah, we can do scenarios where these are levels, and that's a topping off structure. And the confirmation for me is once we break this, and next that is a bit too late, and you can see the downtrend big time. So that was parabolic, and this method of using break off structure or the change of character prepares us for a reversal or continuation. So we'll leave it at that. Got any questions? Just post them.
There you have it. Please give Sam a like, share, and subscribe to his channel to support him for doing more of these posts.